What's interesting here, Peter, I don't know if I really hit on this before, but so we have these ebbs and flows, but we also have, you see these uh, orange or yellowish dots here.
Hmm.
So those guys, let me just some text to it. These guys are bounces and dips. All right. And so the bounce is saying that the amount of dollars flowing has started to increase. It's not to the point yet where we can say that it's a flow, that it's definitive, but it is starting to increase, which usually means, hey, look for a move in this direction in the short term. So over here, this bounce was followed with this rise over here, right? You see that
Right.
there?
I see it.
This this bounce over here showed up with, actually it showed up later, so it showed up over here, but it talked about uh, this guy, right? This bounce over here, and then we have 1 second here, or these dips. So this dip that we saw showed that there's downward pressure for the price because the liquidity is drying up a little bit. Over here we had a dip, and there's a downward pressure in price that we're seeing here, right?
So if I had your signal where that green one is in 2023 at the beginning there, then I would have known that even though there's a downward pressure to still hold until the red signal.
From over here up to here.
Yeah. Because look,
Yes.
it went down pretty scarily.
So this is what I wanted to show. So the flow indicator, the ebb and flow, and the dips and bounces are given one piece of information, but I created multiple different indicators to help me interpret this information a little bit more. So if we take a look, this bounce, you see how it's a yellow bounce. It means the reason it's yellow is that it's saying we're already supposed to be in an ebb, in a downtrend. But in this downtrend, I'm getting a signal that says go the other direction. Just like over here, there's a bounce, and it said, hey, we're probably going to go to the other direction for a little bit, and it did. Over here, on this candle over here, it showed a bounce, and then on the next candle, it skyrocketed, or it jumped up a lot. It went up by 6%. But it's saying don't necessarily be fooled by this 6%, this big move, because we're still in a downtrend.
Otherwise, it would be green.
Otherwise, it'd be green, exactly. And so that was true, and it fell back down. Over here, there's a sign that says we have a dip, and it's the dips in red because it's like, well, we are in a downtrend, so expect it to come lower. So even though it went up, you would fade that, and it did come down afterwards, lower than this dip. So when it got to this bounce, you always get a counter trend move. You always get a bounce or a dip, a yellow bounce or a dip before the trend actually changes. Because before it's like the red, yellow, green for stoplights. It has to go through yellow first before it can
Right.
get to the next signal.
Right.
So whenever you see a bounce anywhere, a yellow bounce, it means, look, you're looking for short-term bounce. You're still in a downtrend, but this may turn into something that continues. And if it does, that's where you get your flow signal. So you can actually start placing your long position, like start buying at the bounce in anticipation for it, or really be vigilant and wait for the flow to show up. Now, once the flow shows up, you'll notice that, so for example, the price, it moved up. And do you see this H up here?
Yeah.
This H is saying, hold up, let's pause a bit, right? That the price, this is actually responding to the price. It's saying that I get it, you're in a bull run or whatever, but the price is slowing down. I'd maybe think about pausing here. Like you should expect the price to come down. So that might be someone who wants to sell at that point to buy back lower. It could be someone who be like, okay, stop buying right now. And if it dips down, buy some then, right? If you're in a bull trend. And the H shows up, and then the price comes down, right?
H stands for what again?
It means that these are called high tides and low tides. So the H is for high tide and L is for low tide. So the idea is that we've gotten as high as we're likely to get for this short period of time. We got to ease up a bit. So then the price comes down, and then it goes back up, and then we have a dip, and then it comes all the way back down. But I just want to show I want to take this opportunity just to show a couple of the other indicators, so that when we talk about the past flow signals, I just want to give context for, you're like, Tom, what about all these other squiggly lines? The price went up and down and up and down and up and down. What else is going on? Well, you'll notice here that the price, when it moves, it's moving with these currents, what I call currents, or types of moving averages. And you see how the price came and bounced right down, basically around this current, right? Every one of these currents, this teal one, this yellow one, this orange one, whatever, purple one, that is saying that there is a school of people, there are people there who are likely to want to interact with the price when it gets to that location in one way or another. Either they just completely ignore it and they just let the price come right through, which means that, oh, that level is no longer really being supported, or it bounces around that level. But it's sort of like a zone.
Is this resistance levels or whatever? Is that what they're talking about?
Yes, but I call them currents because it's sort of like if you were to meet a current, you would meet a sort of resistance, but it's not like a floor or a ceiling. It's just depending on how strong that current is, you should expect some sort of feedback from it. So over here, the price falls into it. You have to imagine it going boom, and like it goes down in the water a little bit, but then gets buoyed back up, and it grabs some energy from this, or grabs some power from this current, and the price moves up a little bit. And then it says, the dip says, nope, but we're still going back down, and then comes down, bounces around the current, and then breaks through it. And it heads down to the current over here. I believe this is the yearly current. And it hits down over here. And over here on this current, there was tons of energy. Not energy, I shouldn't call it that. There was tons of, well, it is energy. There's tons of energy there. And it said it grabbed a bunch of that energy, which is to say a bunch of people who are willing to buy at that area, and launched the price up. It launched it up. I don't know if you've seen it here. The price launched up. It boing, the hit at the next major current. Boing, bounced around, and then continued forward past it. And it broke out of it.
And
Now,
why
when
didn't it?
out,
Go ahead.
it broke out of it, but why didn't it keep skyrocketing up? Because we got an ebb. It said the flow of dollars is being pulled out of the system. So boom, it went sideways for a while. There was a little boom hiccup of a bounce because liquidity came back for a little bit. It came back down, stayed sideways, and then said, no, we're going to continue down with the ebb. And it came down.
I know I've asked you this before, but it just seems a little wild to me. So at these signals are not retroactive. I would have seen this at the time.
100%.
Then this is like a super chart thing.
That's how I feel.
Wait, okay, so you really take the concept of liquidity and flow and currents, and you're almost making it like more literal.
Right.
Like to you, flows is not just a word, it's the mechanism by which you are analyzing these charts.
That's right.
Is that how most people do it?
No.
Like, what's the difference between this and Lux Algo?
So what those types of things do is that they look for market structure. They look for the price. So for example, they'll say, over here, we had this, let's call it, okay, so they'll say that over here, the price stayed in this zone, this range. And can you see that box?
Yeah, I can.
That it was in this range. And then afterwards, that it broke that box. And that what we should expect is for later on, so this box becomes a, let's change the color. So the idea is that later on, when the price comes back here and breaks this box, they consider that to be bullish, because they're like, this zone had people inside of it. Now the price came through it, it means that the price should continue for a while. And they would say, oh, the price came back over here and re-met that zone and bounced off that zone.
Well, that looks like it works.
It does, but it doesn't tell you that this break is likely to happen. Flow does. This tells you the information 20%, 30%, 50% after the move is already done. So let's say you sold it over here. You sold it at this area over here because it broke. You're like, okay, it broke that box. I'm going to sell it over here. Right?
Right.
So you sell over here. Then you buy it over here because you're like, I'm going to wait for it to break out. So you're already missing out on the height of this box because you sold it over here and you're buying it back over here. And then it comes back down to this box and you don't know if it's going to break this box or not, or not. Like you don't really have any information as to how strong is this box. It broke through it before, it went up before, and now it's coming down to it. So if you're sitting here, you might be like, well, do I sell?
Wow.
Whereas the flow tells you that over here we have the so here we have the ebb that occurred. Let me just get rid of this box. This ebb occurs over here and we fall down. And where did we fall to? We fell to the orange line, the yellow line. This is the lustrum.
A trip, Tom. This is a trip.
This is the five-year average. And this line has been supported, if we take a look, has been supported for the entire life of Bitcoin. Just hide the flow for a second. Right? It started in February 2016, and the price has never really closed below it. It stayed as the support line. Every single time Bitcoin fell down to its most area, it always fell down to the 5-year lustrum. To the lustrum. Well, lustrum means 5 year.
My God. Oh
So
my God.
when you're looking at over here, you're like, oh, it's going to come down, come down, come down. And, you know, even I, before I really came up with the signal, I was like, oh, it's going to go down even further. We're going down to 6,000. But the signal says, well, no, we're not likely to cross this area, or there's likely to be a huge amount of support at that area. And it was. So it might still fall. It might be like, I'm still worried that it might fall. So then you wait, especially when the dip here showed. So then you wait for the bounce. You wait for a bounce and then wait for a flow. And then when you see this, now you know you can buy. And you don't have to wait till you're halfway up this move. And then, you know, suffer, because even when it fell down over here, you're still up from this flow. You're still up from the bounce. You're still up from this level. So this is why I like it better than the structures. So these structures, they'll go like, okay, the price ebbed over here, right? And they'll say that the price ebbed over here because of this zone. The zone over here, right?
Mm-hmm.
Yeah. The zone. And they'll say, that's why we've been stuck over here. And they're right. There is a resistance area over here, right?
Mm-hmm.
But I don't have to rely on that resistance zone. I can say, so let's say this is a resistance zone. Over here, the question would have been, well, is the price, let me just make it clear. Someone might have been like, oh, we're getting a new bull run. Maybe, but it just says bounce and it's in a downtrend. So chances are you want to fade this, and it turned out to be right. So imagine you come back, now you're over here and you're like, oh, this is gonna be like last time, it's gonna fall down again. If you don't have this type of indicator, if you're not tracking global liquidity, then you might be like, well, the same thing might happen over here, that the price hit a ceiling and it's going to come down. And it could. I think Gareth Soloway was talking about, like, oh, it might stay above 30,000. It might go below. If it goes below, we're probably going to fall, that sort of thing. But if you know about the global flows, you can see that the likelihood is that the price will go up, even though he thinks the likelihood is that the price will come down. Richard Hart says the likelihood is that the price will come down. It could. But flow is saying otherwise. So that's what the usefulness of this. It gives you indication. So I just want to finish up with the other stuff I was talking about. So the currents, I hope that makes it clear. It gives you levels that you can follow. These are dynamic levels, and if the price holds on it or breaks through it or hits it or whatever, it gives you it gives you information. It lets you know what's going on. That so, for example, that the price fell down over here. So first, the price fell first from the high. It broke through the. Let me get the name of it. I can never remember them. It broke through the monthly average. So we had first an H that said, "Hey, hold up. Things are first of all, we're already supposed to be in a down in a dip. It's like the price went up, even though we were in negative liquidity, which means some shenanigans was going on. We can
Right.
talk about that some other day. It says, hold up, price wise, we gotta put the brakes on this thing. Right after we get an ebb, then the price falls down through the monthly, through the seasonal. It so it bounces off the seasonal, comes through, it comes down to the yearly average, bounce over, falls through it.
Okay,
Then
so
after that,
those colors there are specific. What are you talking about? Seasonal, the teal, the purple.
each
These
one
are
of these currents
yeah.
are dealing with certain time frames.
And what are they? Yellow is what?
There are many time frames because even within the price of anyways, there right now we're looking at day, week, month, season, year, and lustrum. But
Alright.
the time frames go all the way from decision to seculum. Decision is like I think 1/3 of a second, and seculum is about 80 years.
Okay.
Oh, sorry, cycle is 320 years, but I don't have any charts that go on that long. So we had this ebb, we fall down, we get to, and you see here how the price hammers against this red line. Hammers up, 1, 2, 3, 4 hammers, right?
Mhm.
So people were like dead certain we're getting through there, we're gonna get all the way, we're gonna get up. But if you had the signal, would tell you that there's a pretty strong resistance at this year. In fact, afterwards, when people thought about it, they thought about the let's go with exponential moving average. There's a moving average that people use a lot, which is the 200-day moving average. So let's just put that on there. 200. Let's make it white and thicker. So people use averages all the time, right? And the price does interact with it. Like it interact with it over here, it interact with it over here, over here. It is useful, right? But over here, the price broke the 200-day moving average. So people thought, yeah, we're going to the moon. But that wasn't the average that mattered. Turns out it was the early average that mattered here. That's actually what it was hidden against. Like people were talking about this guy over here, but it's actually these points that the price was actually interacting with. Right?
Right.
It was
So
actually interacting with the yearly average.
it's so obvious with this
That's
indicator,
how I
these
felt.
signals.
Yeah. Okay. So I'm gonna finish that off. So it falls, blah, blah, blah. All right.
And that green there, that's Celsius.
This is Celsius, exactly.
So even though we got a green flow, there was a black swan.
Well, there was a possibility for it to rise, but so the flow is just telling you what's are the flow of dollars increasing or decreasing? That's all it's saying. That's all
Mhm.
it's saying. And so the flow of dollars was increasing, and then it decreased because of the Celsius thing. All of a sudden, people went, "What? Oh, things are collapsing. 3 ACs going down. Celsius, whatever. Pull money out. Pull money out. Pull money out." And then we get a month later, actually less than a month later. So this is June 6th. We get flow signal, and then by June 20th, right, a couple of weeks later, boom, the signal is saying the flow has been pulled drastically, and then less than a month after that, we're in a downtrend. Like it just moved that drastically, like a dam was put up. All right, on here because I've never actually talked about this with you, Peter. So we've talked about flow, we've talked about the currents, we've talked about these tides where you get these periods, like over here it's at a high tide over back over here when the price fell. I think this is when Luna collapsed. It said L over here. Said that, hey, we're it looks like we have a bottom here for a little bit. I don't know how long, but the price, we've moved too far down. We're gonna stop here for a while. Well, everyone thought the price was going to fall straight down there. This was saying, hey, no, not really. And then a little bit after that, a bounce. Okay. But I've never shown you energy. And I'm trying to find a better way of displaying this information. This is what I have in version 2 so far. Energy are the candles. You notice how some of these candles are hollow and some of them are filled in.
Yeah.
And some of them have dots on top and some of them don't.
Right.
So the candles, I consider all candles to be pointless until the amount of energy at that, the amount of activity at that candle makes it so that that candle's movement is actually significant. And so for example, over here, you'll see that this candle, this green candle is actually filled in. It's the only candle around these guys that are filled in. And it fills in right at the bounce off this weekly average. So it's saying that this bounce off this weekly average is actually probably going to be sustainable. And then the very next candle afterwards, it's 5 times bigger. Over here,
So this is good for day traders, is that it?
Exactly. This is what's good for day traders. These the tides and the energy are great for short-term traders, day traders, swing traders, whatever. Like if I were to zoom in on a 1-minute chart, it would work the same. So over here, the price, we got a high, says the price slow down. And here you'll notice that the candle, the wick actually goes up. It goes actually higher than that high, right? So even though the price slowed down, it went up. So someone might be like, oh my God, I sold over there and I shouldn't have sold. But the candle is saying, I have a red dot on top. I've hit something.
Right.
And this is like boiling water. Things bubble up all the time. Sometimes you get a signal and it goes past that. But here it says, I hit something. And that was the last high until it fell down, this over here. Here it bounced a little bit off of this, the monthly line, and then it fell down further. When it came back up, it hit boom once, twice at the same level. It says, hey, there's something here. I'm hitting something. Right? So the price went up, it hit something, it came back down, grabbed some energy, came back up. So this is significant. It came back up, hit something else, and it says, I'm hitting something. And then soon after that, the dip appeared. And we never got back until we came down, grabbed some more energy. And look, it grabbed this energy, and it was such a good grab that not only did it bounced with a green candle with a green dot, and said, the next thing should be, not only are we grabbing energy, we're grabbing energy at an average, at a current. So it's like, boom, boom, and it skyrocketed from there, all the way up. Then it came over here, said, hey, I hit something. Well, we know what it hit. It hit it hit the seasonal average. But then when it came back over here, it came back down. So right, it hit, came back down, but it didn't come back down to any of these lower averages, these lower currents. It stayed around there, which means the energy was still there inside of it that it accumulated. So green candle, see this green candle is solid green. It means it's significant. And this candle is solid green with a dot. That means as this candle was forming, it was saying, yeah, we got some energy. We're going to blast up out of there. And then it did. Then you see here how it goes red candle, red candle, or red dot, green dot, red dot, green dot. It means like, like we're done. Ding, 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 ding. Like we got stuff on the top and at the bottom, like we're staying right here. And that was the beginning of a consolidation zone where we get this consolidation sideways. So the energy helps you greatly with understanding to make your decisions as to how these prices are moving. Same sort of thing happened like over here. The price fell down and then green dot, red dot, green dot, red dot, green dot. It's like, okay, we're staying here. I know we're moving a lot, but we're staying here until something significant happens. We're not going anywhere. We're doing all that right around the 5-year average. Over here, it fell down. This was FTX. Green dot, red dot, green dot, red dot, green dot, red dot. We're not going anywhere. We're going to go down lower. We're not going lower. It doesn't look like we're going any lower. Sorry, buddy. I mean, this dip might have meant we went lower, and we did. We went lower from over there to over here, right? So that was still a drop, 10%. That's pretty significant, but it didn't go any lower than where this zone was saying, hey, look, we got some bouncing arounds over here, bounce, green dot, red dot, green dot. So you're getting the idea. So that's how you end up reading these charts a bit. Like you end up using that information in order to make your decisions. So let's say there was a sell signal on over here, this ebb. Let's actually move these ebbs back to let's get rid of the text. We don't need these guys anymore. Not that we're professionals. Here we had a sell signal, right? And you might be like, oh, Tom, I would have sold over here. Okay, totally understand. But all the currents are moving upwards. They're all turning upwards. So chances are the sell signal, you can't really lay into it because it's not being supported by anything else that's saying that. Right? So you don't go all in on that. Whereas a sell signal on over here, the sell signal came after a high was confirmed, the high tide was confirmed. I said, boom, I hit against something. Okay, the high tide is confirmed. This guy's giving me a sell signal, but on a green candle that hits right on a current. So chances are we're not falling right now because this candle and the current is saying there's energy here. So it actually went a little bit further, it went up more. And then when this energy that it took petered out, then it went over. You'll notice that this candle, although it's green, doesn't have a green dot underneath it, which means it's strong, but not as strong as the candle we saw before. So
I like that you're showing me this because what you're showing is like, you're not pretending that this signal is 100% foolproof and whatever. It's like it just helps you to understand the charts more and make better decisions. This is the first time I've ever looked at a chart and been like, oh, I understand what I'm seeing.
right,
Like
that's
this,
how I feel.
this will
When you look
help
at this,
people who are beginners and people who are veterans, I guess.
yeah, imagine this is all you're looking at, right? Let's say you're here at the before the rise in January for Bitcoin. How does anyone look at this chart and not think, well, it's going down, it's just going to keep going down? And
Right.
what they would have said, if you just did regular technical analysis, is that it's going to go down to this level. That's what they would have said. That's the they would go down there. Okay, that just by looking at the chart, that's what a normal technical, I mean, amongst other things, this is what they would have said. They would have said that this guy broke this this trend right over here. They broke the trend, and that's why we fell. Fine.
What you just did there is what I've seen in every video that I ever watch. That's what
Totally.
I've seen on the news. That's how they do it. They draw the straight lines and that's it.
So there's no reason to think that this guy wouldn't come down over here, right?
Right.
Not for nothing. They didn't even necessarily know this was going to happen. Now they're going to tell you how far it's going to go. But when you add the indicators on it, all of a sudden you go, no, it got caught right there. We should go much lower. That should be where we're at. Unless some event occurs that makes Bitcoin like some external black swan, there's no reason. It has never broken this level. Right. So I find these things to be super useful. So I recommend that people use the signals that I have in conjunction with whatever else they're using.
Right.